I'm Charlotte McLeod with investingnews.com, and here today with me is Guy Lepage, Director at RM Corporate Finance. Thank you so much for being here. Great to have you.
Thank you for having me.
Yeah, really good to have you here and good to be meeting you. This is our first time talking. So where I thought we could start with is just a brief introduction to yourself and your work in the mining industry.
Sure. We're a medium-sized stockbroker in Perth. We've got a wealth management division and a corporate finance division investing in natural resources all around the world, and a particular focus in North America at the moment. So plenty of opportunities here, and really pleased to be here again.
Yeah, all the way from Australia here at PDAC. Hope it's going well for you here. I think that our audience has a pretty strong grasp on what's going on in North America in terms of mining industry trends. And it sounds like you've got an interest in North America as well. But before we go over there, they may not be as familiar with what's going on in Australia. So any resource industry trends that you're watching closely over there?
Yeah, well, there's been a big uptake in gold stocks, obviously, in the last 12 months. We had lithium the last 2 years, and that sort of dropped off a bit. But a lot of investment in West Australia in particular, but a lot more investment into Canada over the last sort of 12 months.
And maybe we talk a little bit about, you mentioned gold over there, of course. Any other metals that are getting traction in Australia this time?
There's plenty of interest in copper, uranium, and more recently antimony, I guess. But there's still investment in other special metals like tungsten. So we're seeing broad interest across the commodities.
Yeah, and for you, are you focusing on specific metals right now, or the ones that you like, or are you pretty agnostic to that? How do you feel?
I wouldn't say we're agnostic. I think the primary focus is probably copper and uranium. There has been interest in specialty metals, but that's a lesser part of our business.
And we'll talk about, you've got this interest in North America, as you mentioned, but I wanted to, highlight some of the differences between Canada and Australia right now. What's the financing environment like in Australia at this time?
We've probably heard it 100 times before, but ASX is probably the premier resources market in the world at the moment. I think the trend that we've seen is, the banks got control of the brokerage houses here, and a lot of those funds have gone into pension funds and mutual funds. So that money's hasn't been invested back into resources. We haven't had that trend in Australia. There is a trend towards managed funds, but not to the same extent that we're seeing in Canada. So I think we've got a more buoyant, natural resources market.
Yeah, certainly that is something that I've heard quite frequently in terms of the differences between the two markets. And you mentioned kind of that institutional level. Yeah. I also hear that there's more at the retail level, just a culture of investing in mining stocks in Australia versus here. Would you say that?
Yeah, well, that retail market was alive and well 18 years ago. And certainly when I was here in the early 90s, there was a very big retail market. But that retail market's very strong in Australia at the moment.
Yeah, pretty interesting. And so you mentioned you're looking over at North America right now. Why is that? Why are you looking over here?
Well, there's some great resource opportunities. We've invested a lot of money into Newfoundland, Labrador, Nunavut. There's quite a few Australian companies looking for copper up in the Nunavut region. I suppose the reason we're here is, we're filling a gap. It's difficult for companies to raise $1 to $5 million in Toronto. It's actually not that hard to raise $50 to $100 million in Canada, but that smaller end is difficult, and that's a sort of void that we're filling at the moment.
All right. And, are there anything more you can say about specific opportunities that you're seeing over here, companies that you're looking at?
It's hard to sort of pinpoint any particular opportunities, but broadly I'd say there's more opportunity for Australians to invest in Canada and North America. And in fact, a lot of the markets that the Canadians were investing in, South America, for example, generally the money's dried up for junior exploration in Canada. So really that is the opportunity. So, we're looking all around the world, and, this is still the premier mining investment conference in the world. So this is a great place to come and look for opportunities.
Yeah. It sounds pretty good, like an opportunity for you. Do you see the financing environment changing in Canada, or are we kind of stuck like this?
Well, there's a few things that we'd like to see change. I think they should tighten the regulations around short selling. Flow through has been very good. We've done charity flow through, that's been positive, but I think there has to be a change at the top down level. So, the banks and the brokerage houses have to open up to junior exploration. But when the cannabis boom came to an end, a lot of that speculative money dried up, and it's now competing with, cryptocurrencies, sports bet. There's other sort of high risk investment. So, resources is only one opportunity on that high risk end. So, but I think there's more that can be done in Canada to stimulate exploration and investment for sure.
Yeah. Any specific things that you would say this is an area to pursue?
Um, it's hard to, well, apart from the short selling and really the attitude of the banks and wanting the clients to take less risk and have more of a portfolio management, pooled funds investment attitude. Pretty relaxing, not saying relaxing, but making the approval process in places like Ontario, Quebec a bit easier. Has been a bit slow, but parts of Australia are slower and other parts of the world are. The short selling is a big one. I think that's really makes it very difficult for juniors here.
Yeah, certainly that's a comment that I hear quite frequently. So, looking at companies, when I ask people, how do you evaluate mining stocks? A lot of the time, the first thing they say is they're looking at the management, right? I wondered if you had a different approach or a similar approach. I know you have a background as a geologist, so I thought that might be interesting to look at.
Yeah. Well, certainly we've got a strong technical bent.
Yeah.
And, really what we're looking for is potentially tier one assets in stable jurisdictions. Now, that's very hard to find because stable jurisdictions are diminishing by the hour around the world, as are tier one assets. So, certainly looking at strong management, but looking at commodities, I think going to be in demand. And I think copper and uranium are front of our mind at the moment. Uranium's been a bit soft, but I think that's going to have another run next year. So we're putting a lot of effort into that.
Yeah, definitely. I think that'll make people a little bit happy to hear that you see that coming for uranium. Anything else you would add there on that potential?
Look, one that's probably been looked over is nickel. That's had a tough few years with the Indonesia accounting for, I think, 30-40% of world production, even a bit more. So that's a bit of a counter-cyclical opportunity potentially. But obviously gold's been running hard. There's a lot of interest in gold. So a lot of these lower grade deposits around the world are getting a lot of attention. So we're certainly looking at gold opportunities.
Yeah, and I want to ask you a little bit more about jurisdiction as well. You kind of mentioned that the stable jurisdictions seem to be just evaporating by the moment. So how do you deal with those fluctuations? How do you determine what is safe and may hopefully stay safe?
That's on a case-by-case basis. I mean, we've had a lot of headaches in West Africa, so Burkina Faso, Mali, Niger. So one of the things we're looking at is making sure we go into that jurisdiction through another jurisdiction that has a treaty with countries in Africa, for example. We're seeing some instability in Mozambique, which was stable for quite a long time. So Africa's pretty difficult. You get in places like Peru that's socially challenging. It's sort of really on a case-by-case basis. But in particular in uranium, there's only sort of 6 countries that really accept uranium exploration and mining. So those opportunities are limited because obviously the tenant competition's increasing.
So we talked a little bit about what you like to see in a company. When you're doing these evaluations, any red flags that you would highlight? I know we talked about jurisdiction. Anything else that you look at and
Well, I think management performance. I was listening to a presentation at Red Cloud yesterday, and the presenter, who's sitting just over here, in fact, did mention that he had a list of people who lied to him over the years. So obviously, looking at management with track records important. Ability to get permits, stable jurisdictions, tier one assets. And our ability to finance those projects over the longer term. So, it narrows it down to a very small field of projects and companies we can invest in.
Yeah. Okay. So good to look at kind of your criteria that you go over. I also wanted to talk about, you mentioned these cross-border opportunities, right, between Canada and Australia. So anything you would share on, investors in Canada who want to invest in an Australian company, or vice versa, anything they should be aware of, things to know about that?
Well, culturally, the investment climate's quite different. The way transactions are done are quite different. The trend is for Australian companies acquiring Canadian assets or investing directly or doing joint ventures with Australian companies. So there's a lot of good assets sitting in venture or CSE-listed companies that aren't doing a lot. But now with investment opening up around the world, there's no reason they can't be investing directly into ASX equities. There's good liquidity, good support. And that traditionally hasn't happened in Canada. It's been more Canada-centric. So, I'd encourage the investors here to branch out and, buy some Aussie stocks.
Yeah. Maybe they should buy the Canadian ones first before they do that. But
good.
Yeah. All right. Well, this has been pretty interesting. But before I let you go, any other thoughts on either Australian or North American resource markets that you have on your mind right now that you think investors should be aware of?
Look, I think the one of the things that's changed around the world is the permitting and approval process. And obviously, First Nations are a part of that approval process as well. So, I'm not saying that the governments have got to, become more lax on permitting or Indigenous affairs, but maybe more streamlining and acceleration of that approval process. But, the US is opening up. Nevada and Arizona are good jurisdictions. The US is a bit more complicated. It's really a state-by-state proposition.
Yeah. Okay. Well, thank you so much for coming on to go over what's happening in these markets. Really good to have you. And we'll let you get back onto the show floor. Thank you so much.
Thanks for having me.
Of course. See you next year. Yeah. Or hopefully sooner. We'll see. All right. And once again, I'm Charlotte McLeod with investingnews.com, and this is Gila Page.